All right, good morning. I know I said I wasn't going to do a live stream, but here I am. Happy holidays, everybody. Peace on earth. Okay, so welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I salute you. Let's take a look at the market, identify maybe some last minute opportunities, but more importantly, threats. So let's go through the charts. I recommend gold, oil, Bitcoin, dollar, yen, maybe some Swissy. Do you want to do some other crypto? I don't know. Do you want to do some other commodities? Do you want to do silver, palladium, platinum? I don't know. You let me know. You let me know. So let's start with traders.com. Let me log in. I think I'm logged in. Yeah, we'll go with the fundamentals. So traders.com automates all your technicals and your fundamentals, provides performance coaching and education. You also are going to need execution. And I recommend using an ECN. I think it's better, cheaper, faster, but most importantly, more ethical. So Trader's Way is one ECN. And I've been recommending them for over 10 years. Okay, they have a good business model and above average good-looking employees. So, fundamentals, technicals, coaching, courses, community, and execution. You see? All right. All are vital. Think about that. Think about traders.com as your infrastructure. Okay? You need good infrastructure if you're going to compete in this market against billion-dollar hedge funds. They have good infrastructure. Like, for example, maybe like a Bloomberg terminal, but that's $2,200 a month per terminal. You got 5 employees, it's $10,000 a month. Yeah. So how do you compete with that? Traders.com. You want me as an economist on your team? Boom. Traders.com. All right, so let's take a look. Bitty. Can't you see? Wow, $95. It was $94 just like an hour ago. So, hey, maybe that's good. Yeah, Yeah, 95, not 105, but 95. Dollar strong. Yeah, no diggity, no doubt. I will be talking about my dollar outlook as part of the annual outlook. So hopefully you're signed up for that. Do I even have a link for you? You think I would be a good marketeer? I don't know. TRADARS.com offers checkout annual outlook. I think it's this one. Yeah, it is. Good. Good. That's good. Yeah, that's good. Okay. The annual outlook, I will cover dollar. We're going to cover a lot of things about dollar, but we're going to cover a lot of things more directly like stock market as well. Because if you know what the dollar's doing and you know what the stock market's doing, it's sort of you have a dollar issue, but then you have a risk on, risk off issue, and you can have this dichotomy and moves. And yeah, well, you know, it's complicated, and that's why we're going to talk about it. Okay, gold not doing well. 10-year T-note up. There is a relationship here. You need to understand that. The higher the yield, the less you need gold. Okay? And oil is 69. No, that's not right, is it? I guess that market, the futures market, hasn't popped yet. I guess it just would have popped in the last couple of minutes. I think it's much higher than that right now. That'll probably update in a bit. Long term, here it is, one of the last trading days of the year. And guess what? There's no long-term trend. Makes sense, doesn't it? Yeah, it makes sense to me. Okay. Shorter term, dollar strong mixed here. Look at this. Like, it's just crazy, right? Medium term, off. Short term, on. Yeah. And long term, nothing. I mean, look, that's so funny. It's apropos more than it is funny. Okay. Bearish. Okay. We can look at this. Put call ratio favors the bears. Yen, again, I might change the scoring a little bit because there's some inconsistencies in the way, like the magnitude of the changes. And so I'll have to go through the math maybe over the rest of our holidays. Happy holiday. Yeah, I am working, of course. So anyways, yen is a little bit weak, and that's good. But like what I mean is maybe I'll change this. If it's less than 1%, it should be a 0, right? Between negative 99 and positive 99.99, right? It's a 0. Yields are up on the short-term hot money market. Well, that's not good. Gold is down, and I would say that is good. Okay, I might have to change that, but I'll leave it because, you know, after talking to Jay Powell the other day, they're switching back towards inflationary concerns. Well, you know, so we got to watch that. So if gold is going up to hedge inflation, well, then that would not be bad. That would not be good, you see. So not using gold to hedge inflation, I'm going to count as good. But meanwhile, you know, the 10-year, if that's going up, that's bad. And of course, if that's bad, then gold is likely to do the opposite, right? So anyways, there is a relationship. Okay, dollar is strong. Of course, that is not good unless you guys want to do a pop quiz. Let's do a pop quiz just to see if you're listening. All right. Strong dollar, who benefits? Give me an example of somebody who does want strong dollar. There's many answers. Give me one. Yep, not a farmer. Emerging markets? No, I don't think so. Because their debt, Bruno, is priced in dollars, so they have to pay more than debt. Now, you might be thinking as an individual, and you're like, well, I'm hoarding a bunch of dollars because my local currency sucks. Well, you have to think on the aggregate, right? People who want to import, yes. Now, how about the other side, Lucas? What's the equal but opposite, Lucas? Because if you get that, then you can get to like specifically whom. Exporting nations. Okay, now let's get more specific. Give me a country, Lucas. Pick a country, any country. China. Okay. What about another country? Australia. Yep. All right, so let's pick on Australia. It's easier than China. China's more complex. Okay, Australia. What does Australia export to the world? What is one of their major exports? What we're doing is we're following the money. And I don't know why I got into Socratic dialogue lately, but it seems to be right. Coal. Okay. Yeah, they're in particular, they're clean coal or they're gold. You bet. Okay, good. So now you could get down to individual companies that mine coal and gold, huh? If you had said Germany, we could get down to like, manufacturers of Porsches and VWs and Mercedes and Beamers, those particular companies would benefit from a weak euro and a strong dollar. Those that manufacture gold, coal, iron ore, diamonds, beef, wheat, wine in Australia would benefit from a strong US dollar and a weak Aussie dollar, right? So we have to be able to thread all of that. If you're going to be a foreign exchange trader, you have to know what each individual country is praying for because they might actually put policy and procedures behind their prayers, right? Policy, procedure, prayers. That's my book on how to run a government. By Wayne McDonald. Trademark 2025. All right. So anyways, cool, right? Thank you for participating, by the way. Now, Lucas says, not farmers, which is that sort of double negative or whatever it is. And that is true because farmers sell much of their wares to foreign countries. And if we have a strong dollar, sorghum prices, not in the United States, but sorghum prices in other countries in terms of dollars. And that's why we talk about in term, right? The base of the term. In terms of US dollar, sorghum appears to be more expensive relative to the local currency of whatever country is, needs the sorghum. Okay. Now, why do you say good for Canadian farmers? Is it sort of the alternative? So if I don't buy American wheat, maybe Canadian wheat is a little cheaper in terms of Canadian dollars versus US dollars? Like if that's what you're thinking, Lucas, a farmer could trade that. As a form of hedging, not just the U.S. markets, but they could trade also the Canadian markets, right? So anyways, you got yourself a trade. Okay. All right. So what do we see? Bitcoin not doing well at the end of the year. Okay. Could be profit taking. I don't know. Okay. If we look at majors, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. Cool. Nice. So, and we've been bullish for, quite some time. Like, for example, if you don't know how to read this, so if you're a YouTuber, but you're not a subscriber to traders.com, you're like, so how do I read this? All right. You look at the score at the bottom. That's bullish. And then to the left are negative scores, bearish. So we've analyzed, let's say, at least 8 variables for dollar and at least 8 variables for pound, and then compared the two and came up with a score of -6. So it's a comparative analysis of macroeconomic data. Cool. So you either have a bearish score or you have a bullish score. And what you see here is, okay, USD Kitty CAD is very bullish. And then on the left side, you show either it's down right now or it's up right now. So bullish and expected. All these 3 assets with dollars on them. Quantitatively speaking, and then through comparative analysis, traders.com expect these things to be up. And they are. Bullish and expected. Same thing, you do your macroeconomic analysis of each individual currency, and then you do comparative analysis. Traders spits out a negative score, and all 4 of these assets are down right now, not just in general, just now, right? So it's long-term versus short-term, right? Like now, like over the last few hours, not days or weeks. And all 4 are bearish, and that is expected, so that's good. So traders has been saying, you need to be bearish on these things, and you need to be bullish on these things, and every single one of them has worked. Okay. Mensa says, hey, I remember you pointed out Bitcoin at 15,000. Yeah, and I put my whole net worth on it, Manza. Sell everything and buy Bitcoin. Past performance is not indicative of future results. Trading and investing is not appropriate for everyone because it's risky. But I'm glad you crushed it, Manza. Yeah. Glad you crushed it. Yeah, it's always about, Yeah. Yeah, I was flexing on a friend of mine. We were talking about, I think it was the end trades on the collapse, right? And he sold at a pretty reasonable price, and then it went down for pretty reasonable distance, and he and we were talking about it. And I'm like, oh, I sold at at basically the same price, but I held on to it, right? And this is what we did over at traders.com in our like day trading group or swing trading group or something, and I made like 1,000 pips in a week, and he only made like 300, right? right, man? So I'm flexing on him. I'm like, yeah, well, I got 1,000, right? And then he just totally crushed me. He's like, yeah, well, I made $250,000. How much did you make? And I'm like, I don't want to talk about it, but you win. I capitulate. He put me in my spot. Yeah, nice flex, bro. Yeah. He's like, I'm going to buy a Ferrari on that trade. What are you going to do? I'm like, I don't want to talk about it. I'm conservative. So, in that case, right? Same thing. Like, man's are like, yeah, I nailed that call at 15,000. I like the stories when I'm like, I go all in, and I don't have very many of those, but my major flex is calling the 2008 financial crisis before it happened. And I basically sold everything, including my house, and on that one trade plan. And I convinced my wife, who just had her second baby. Our first child was just learning how to walk, so he could put his hands on the edge of the couch or table and kind of cruise. They call that cruising. So he can't even stand on his own legs. We have another one who's nursing. And my wife and I decided to leave her friends and her family and move to the other side of the country because I think the stock market's going to crash. Dude, now, that is an FU trade, right? Like, that was so all in monetarily, but emotionally, and oh my God, that was by far the biggest trade of my life. And 6 months later, it crashed. And the funny thing is, the housing market crashed before the stock market, if you remember that. So I sold my house for a boatload of money, and then we moved to the other side of the country, and 3 weeks later, the California market dropped, and the house I sold, literally 3 weeks later, there was a Fed meeting. The Fed changed their policy. And so by the time I get to the other side of the country, the value of my house that I just sold 20 days earlier dropped like 10%. Dude. And then kept dropping, right? And I'm like, I'm out. So anyways, like Manza, right? Like, I called Bitcoin at 15. Yeah, well, you got to be careful with traders and investors and economists, right? Like, there's a great saying, right? Like, economists called 12 of the last 8 recessions. Right? So you got to take everything with some humility, right? Like, trading is hard. Investing is difficult. Predicting the future is, I wouldn't say impossible, but it's not easy. It's like I took, I did the algorithmic trading program at Oxford, and all my professors were astrophysicists. So you can imagine, okay? Can you imagine being a PhD in astrophysics and you have 30 years of being an astrophysicist under your belt? Do you know why they're studying finance and teaching finance now? Because it's 1,000 times more complicated than the formation of the universe, mathematically. The formation of the universe is easy peasy lemon squeezy compared to predicting whether the stock market's going to go up or down. And how does that impact, iron ore prices in Australia? And this is what we do. Okay? This is what we do, the most difficult thing in the world. But I love it. I hope you do too. Okay. No, you have to pay casho. No crypto, just cashola. Okay? So convert your crypto to cash and then send it. Right? Like Samu, if you were going to pay $3,000 to become an annual member of traders.com, I could take crypto for that because it's a one-time process. But if like 30 people needed me to convert a $50 transaction into crypto, all of a sudden I'm spending all of those hours doing that instead of doing the actual presentation, right? So I just can't do it. It cost me $200 of my time to set up a $50 transaction in crypto for you. And I'm like, I can't do it. Okay. I hope that didn't come across arrogant. It's just, I can't do it like that, man. Bah! All right. 2 year. This is the hot money. It's bearish. It's right. It's absolutely bearish, but in the last day, slightly, relatively, I'll say less bearish. Maybe this yield up here, 4.37. Maybe that's a double top. Wouldn't that be great? I don't know. You know, what's interesting is somebody in this market, like from here to here, like, I guess that's the Fed meeting, right? Yeah. All right. Somebody here to here expected less cuts from the Fed. Good trade, man. I have no shame in saying that. That summary of economic projections surprised me. I was really surprised. So now, like this annual outlook that I'm doing early next year, I have to change and revise. The work already started. I have to kind of undo and I have to rethink the thought process now. It seems like a subtle difference, but it changes everything. So, yeah, and somebody had made that call 2 weeks early. And they got it right, so then it did this. And now maybe they took profit. Maybe it comes down now. Maybe. I can't make that call. Why? How? But it is what it is. Somebody got it really right. And the Fed meeting was this day, and then that's the response. So if they started that trade down here and continued it up, and now for us, it's when it crosses over. When you get the crossover, that's bullish, game on. Yields are going up. So if you're short on yields, long on treasuries, that's when you start jamming stops and stuff, right? So it's still a good trigger. This is risk on. Oops. I won't grab it. There we go. That's risk on. That's risk off. Okay, risk off. No. There we go. Risk on. I mean, risk off. Risk off. Yields going up higher than average. Okay. That's bad. And this is good. Cool. All right. So anyways, let's take a look at the options. Oh my God, right? Fed meeting. Okay. That upward move, even though it's absolutely still risk on when you look at the aggregate of the entire options market, millions of contracts. The aggregate of the millions is they're slightly risk on. So in absolute terms, it's still risk on. But this relative move from 0.85 to 0.98 is massively risk off. Now, if you're in our day trading group, one of the things we have been eyeballing, and I've asked people to maybe do some analysis and look for trades, but what tends to happen every time we get to this level? Can you see the pattern? Can you see the pattern? So you could spend some time over the holidays. I have family coming over today and I'm working. Okay? I worked yesterday, but I cooked a pork roast for my family with the bone on and Frenched. So I sous vide. Oh, and then I seared. Oh my God. That was so good yesterday. But I worked too. I know there's family obligations. I know all of this. I get it. Okay. So over the weekend or over the holidays, take an hour or two here or there. Get away from grandma and grandpa and your crazy uncle and all the children running around. And say, what is my plan for 2025? What am I going to do different in 2025? What are my strengths? What are my weaknesses? And then you give yourself a research product. What happened in the market every time this gauge that you have at traders.com gets below 0.8? What tends to flip? Is it dollar? Is it yen? Is it gold? Is it oil? Is it Bitcoin? I don't know. Go find it. But if you see a reliable, repeatable pattern here, and trust me, this doesn't go just back to September 24th. There was very much a similar pattern before. And then if you notice this spike, that's the US election. So it definitely makes sense. Like this is logical. Okay, so cool. So if you see the pattern, how can you make money? Right? How do you make money? Look at this infrastructure. Traders.com for the pro version is $300 a month. And you're like, oh, well, there's other similar services. Well, not really. But there's like other gurus with other cool little websites, and they're only $100 a month. Whatever, bro. You need to look at this as true infrastructure. Like if you're going to build a business around your trading, and you're going to compete not just against other retail lunatics, but against institutional investors, and you want to make logical, intelligent, informed investment and trading decisions, and you want to have like a Harvard economist on your team working with you every day, like $300 a month was the price I paid for having charts when I started trading Forex. Just my charts. That's it. Just to have charts was $300 a month. And your charts and your broker were separate. So you'd open a brokerage account, but you got no charts. So you'd pay money for your charts, but you couldn't trade on them. They were just for technical analysis. Okay? And then then you have this other fee and this other fee and this other fee and this other fee. And like, it must have cost, I don't know, thousands of dollars a month to be a small retail Forex trader. Okay? And so I hope you see the value, like when you look at this infrastructure and the support and the training that you get. Like, I know $300 ain't chump change, but compared to the value, it's stupid cheap. Stupid cheap. When I show it to hedge fund buddies of mine, they laugh because it's too cheap. No joke. They laughed at me. It's too cheap, they told me. And that is not a joke. That is not a lie. That is not an exaggeration. That's not some sales pitch. It's the God honest truth. Okay. Anyway, 0.3 on the Kenyatta. Yeah, pretty thin market because of that. All right, on December 20th, there was an update. Wait, is that's old, isn't it? Wait, what's the date today? Hang on. 23rd. Yeah, that's right. Yeah, that's correct. All right, so on Tuesday, the US government updated us. So I pulled this data out of the Commodity Futures Trading Commission. How nice is that? Right? We gather all this data you're looking at directly from the central banks and government agencies. That's impressive, isn't it? Okay, for those that subscribe to the email services, you got updates on Friday when this news came out. So my phone went pa-ching, and it read me the COT update, and I was informed. Retail people don't know this at all. So, CAD, pound. This is the institutional positioning. Relative to everything, okay, the currency that seems to have the most institutional support is pound. And the one that has the worst, okay, you could have CAD, Kiwi, Aussie. Cool. So you should know right off the bat, if you're going to trade with hedge funds, you should consider looking at and doing technical analysis on pound, Aussie, pound, Kiwi, pound, CAD. The next best choice, according to positioning, this is actual positioning. This is not theory. This is not a survey of what people think. This is their actual money in the market. Large institutional investors like hedge funds. And they're only doing it to make money. They're not hedgers. So, institutional professional money is long dollar. So look at Aussie dollar short. Look at Kiwi dollar short. Look at USD CAD long, just to align your satellites with professionals. Amateurs don't know this, and they waste their time trading the wrong crap. But it's not my fault. All right, so money definitely went to what? Getting out of the Swissy short. Holy smokes. Now, it's still very bearish, okay? But look at the change. We lost a lot of bears, and they attracted bulls. Could be a turning point. So there's not just what I just went over. This is the capital stock. And so you look at Swissy, and it's obviously bearish. But now you want to look at the week over week cash flow. And it became quite significantly less bearish, even though it's still absolutely bearish. 70% are bears. But last week was a bullish week. Yeah, good to know. That's the flow of capital now. Dollar. Okay. There were bears, but they stopped being bears. Okay, yeah. So significantly less people short, right? And then bulls went long. So this long percentage went up. The bearish percentage went down. So the cash flow favors the US dollar. Oh, dollar strong. Okay. Sell, sell, sell. Maybe, right? Okay. And remember, all of this is last week. But this is the most recent information released by the government. So it's not obsolete, but it's not now. It's what happened last week. So the next report will show the shock and awe from the Fed. Okay. Now, check this out. Treasuries, 88.8, right? So 89,000 less bears. Okay? And boom! Half of them became bulls. Okay? Holy smokes, what a swing. Very bullish, huh? See, sometimes you can have a percentage change, but in reality, it's not really bullish or bearish. You know, they kind of offset each other. But no. Bears, significant amount of bears left the market, but half of those became bulls. So literally went from bearish to bullish. That is important. Yeah. Stock market, less bears, more bulls. In fact, not only did we gain bulls, all the bears became bulls. Nice. Okay, nice. So let's do a flipsy flew, and Rand. And I ran so far away. All right, so nobody's long Rand. But for those nobodies, there's even less nobody. Right? Look, 24,000 people are long the Rand. And 2 million are short. Or is that the percentage change? That's a percentage change. Anyways, look, it's a percentage change. 2,000% change in bears. So anyways, whatever. Look, I don't even know. Maybe there's a glitch in this matrix, but look at the net change. It can't be. It just can't be, really. Yeah, same thing. Look at Aussie. Dude, this market ridiculously bearish now. Ridiculously bearish. Oh my God, Australia. 55,000 less people buying the Aussie dollar. And 15,000 more people selling the Aussie dollar. Oh my God. So what side of the market do you want to be? You want to bet against them? Dude, that's your call. You do you. How about New Zealand? 10,000 less bulls and 4,000 more bears. It was already 80-something% bearish. Now it's 85% bearish. So you're buying Kiwi dollar? Like, dude, what's wrong with you? Right? Like, if you don't know this and you were like, oh, well, I see a MACD cross on Kiwi dollar, I guess I'll buy it. Dude, do you understand how vulnerable and naked you are? How alone you are out in the desert? Like, dude, nobody's following your logic. So you're either a genius or a fool. And what are the odds? Yeah. Yeah, what are the odds? Yen, 10,000 less bulls, 9,000 more bears. Oh. But still 50-50, basically, right? No diggity, no Dow. Lots of profit taking. So this is where you learn, okay? 3,000 less bulls, but basically the shorts didn't change. So what happened is bulls got out, and that's it. They took profit. So these folks, I would guess, and it's a guess, later in the future, they'll buy back. They're bulls. They took profit. It'll dip, and then they buy it back. Well, we've had 10 days or something in a row of the Dow falling, so maybe they buy it back. No, I don't, Al. No. I'll just look at change of positions of how many people are long and how many people are short. Okay? You can do more analytical analysis, but it's not needed. Oops. It's not needed for what we do. Yeah. So the next thing is to do comparative analysis, right? So like Aussie dollar as an example. You see this cross? Okay. What does it tell you? Aussie is in green. Dollar is in red. Sell Aussie dollar. See how wonderful this is to interpret what to do? You could have a rule, your own rules of engagement. You're like, in this scenario, you cannot buy Aussie dollar under any circumstance because you'd be trading against the entire hedge fund market. Dude, you're not that big. So you could use this as under your own rules, you cannot buy. Even if you get a MACD crossover, whatever, bro. So you use this information the way you see fit. Okay? And sometimes this is complicated. So now you do it like pairs like Euro Kiwi, right? So Euro is in green. Kiwi is in red. Okay? You can only buy Euro Kiwi. You cannot sell it. Now, Euro is actually not good, but Kiwi is pathetic. So you have like slightly negative versus very negative and getting more negative. See how wonderful it is to have data, especially a visualization of data so you can make informed trading decisions? How many people here can see the power of just this week-to-week data chart? Just this little thing we're staring at. To say, oh, bear. Okay. And you're like, oh, really? Well, what about Euro pound? Oh, you want to see Euro pound? Okay. Euro's green. Pound is red. You should be short Euro pound. Done. And why? Because you're trading with the hedge fund community, not against. And pound is bullish, but less bullish than it was. Okay, but nonetheless, Euro is absolutely the way that institutional investors, they're short, they're bearish. They're definitely bearish. And yes, institutions are long the pound, definitely, totally, absolutely. Now, relatively, they used to be a lot more bullish, so they're less and less bullish. But compared to Euro, it's gold. And you can just keep doing this for everything you want to see. Okay? Now, NASDAQ, because it's not a currency pair, there's only long. But you can now see on October 21st, hedge funds were buying the stock market, buying the stock market, buying the stock market, buying the stock market. And then the election came out. But you can visually see they were already long 2 weeks before. How many people here attended my annual outlook in January? And I said, don't buy the stock market in September. October is going to be down, and you want to consider front-running the election the third week of October. How many, like specifically, the third week of October? And I said that in January. How many people attended that, noted that, recall it? You know it absolutely 100% happened. Anybody? Nobody? Uh-oh. Well, this is why you take notes, I think. Anybody? It's like the whole thing. That was like the cusp, that was the gold mine of the whole presentation, was moving the September buying that I always do and move it over to October. Not the third week of September, but the third week of October. Anybody? One person? Really? Oh my God. You're going to bring tears to my eyes. That was like the whole strategy for the entire year. Well, maybe if I charge $500 instead of $50, you'll take it more seriously. Really, I am flabbergasted. Wow. All right. Gee whiz, is that serious? Wow. Like literally, I'm shaking. Like, really? You don't know that? Oh my God. Holy schnicker-schnocker. All right. Well, anyways, now we can actually see. Yeah, and I repeat it like at least once a week. Yeah, at least once a week, right? Oh my God. Well, maybe you guys are just listening and not. Anyways, wow. Holy smokes. Well, like if you don't know that, then you just don't know how to trade. Like that's the thing. Like you don't understand the behavioral aspect of the markets. Like I absolutely outlined that. That was the whole point. So anyways, whatever. So now we can see that what I did wasn't genius. It was logical. And the institutional investors literally in the third week of October started buying as predicted in January. Which just makes sense to me. That's all. It's like not genius. If you don't know that, then you just don't know how the market. You might know how to trade a MACD or something, right? Oh, how about next year idea? Oh yeah, cool. I'll tell you. Sign up here. Easy peasy lemon squeezy. Now next year is going to be a lot more complicated because the variables are much more dynamic. One of the major parts of 2024 was the election. So I trade the fourth year of political cycles with a particular strategy. And right? So prime ZR, that's what I did last year. And the fourth year of the Trump election, right? So 4 years from now, I'll have very similar strategy outlook. Okay. Again, I never know what'll actually happen, but I know what I intend to, how I intend to plan. Like it's planning. There's planning, and then there's actually what happens, right? So, but I know how I will plan, and it'll be probably a mirror image with some tweaks based on like what the monetary policy is going to be. But this is very, very, very influenced by the fiscal side of the equation, meaning the government, not the central bank. You have to take both in account, fiscal and monetary policy, right? And so this is this part here is a shift in seasonality. That's all it is. And I 1,000% went over that in excruciating detail of how my behavior that I normally exhibit in this period, I will then shift 30 days to that period. So instead of buying the stock market the third week of September, which I do 3 out of 4 years, I'm going to shift it over here to the third week of October. And if you don't know that, then you just got crushed. And I'm shocked that no one else remembers that, because it was the whole point of a 2-hour presentation on why it was likely to do that based on my experience as a trader with, over 20 years. Wow. Really? Specifically the stock market too. Wow, you guys bring tears to my eyes. You missed it. Like, you just really. So glad I asked. Okay. Right, and then here's NASDAQ here. And the gray bars show if you're bullish or bearish. Okay. Oh, yeah, well, that's easy. You just do this. Okay, which one do you want? Prime ZR? Give me a currency pair. Easy peasy lemon squeezy. I can do anything. Yeah, no, that's not a pair, bro. But again, if you sign up for the annual outlook, I'll definitely go over dollar. I mean, it's a reserve currency. But what we're doing is institutional positioning. Yeah, traders.com. So anyways, so I'll just do a pair for you. Let's just do Euro Yen. You see at the top, it's loading. So this is a database. Okay, great. So it's loaded. Euro in green and yen in red. So according to institutional investors, they are bearish the euro. So this is just euro positioning. It has nothing to do with the yen. Are institutional investors long or short euro? They're short. Not by much, but they're definitely not bullish. And they've been short since October 19th. And they've been flat most of the year. Slightly bullish and now slightly bearish. So they're not really that interested in the euro. It's not attractive, and in fact, the market is slightly bearish. Now, on the flip side, yen is in red. Okay? Institutions were shorting red, shorting the yen. What does this mean? When the green is above this line and red is below this line, you're long euro yen. Long, 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 long. Okay, even here it doesn't matter because this is so short. Long, 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 long euro yen, long euro yen, long euro yen, long euro yen, long, and then out. October 10th, you're out. And here, September 3rd, you're actually a bear. Look at the negative crossover. You're actually shorting euro yen. This is out. This is you actually shorting euro yen. And then this is you stop trading right around the election. Oh, you think that's random? Really? Yeah. Hey, Kevin, did you notice you renewed on an old subscription? Did you see that? Because I'm like, oh God. Because like you got like a $2,000 deal for less than half price. You got like a $2,000 deal, and I think you paid like 800 something. And I'm like, that some old thing you signed up for. I'm like, so you look for it. Yeah. Because if you want out, but I'll honor it. Yeah, you should look at it. I'll honor it, but I'm like, oh God. you got a 60% discount or something. And I'm like, oh snap. What the heck? What was that from? I don't even know. Yeah. You know, honestly, I don't even know what it's from. It's from so long ago. I can't even fathom what it is. It could have been a quant box thing. It could have been a FX bootcamp thing. I'd have to analyze it, but I'll honor it and I'll give you a ton for it. Just like I saw it, I'm like, it's a weird number, and I'm like, I don't know what the heck that is. Yeah, but it's something. It would have been like some sort of annual annual subscription that I said you can have this, this price forever. Um, but I honestly don't remember what it was. I just looked at it and two things stood out. I'm like, does Kevin know? And then the other thing, I'm like, what the hell? I'm like, that's not the right price, right? I'm looking at it. I'm like, oh God, really? So, anyways, yeah. So anyways, I'll make sure you have the equivalent on traders.com. Okay, buddy. I'll figure it out for you. I just wanted, I haven't had time to fire off an email, but since you're here, so you want to keep it. And then, so what I'll do is I'll give you something amazing on traders.com. Make sure it converts. Okay. But don't tell anyone. Don't tell anyone. Yeah. So anyways, COT, look, we do this all the time. If you want to visualize this different, on the left is retail, and we get this from pulling from liquidity providers that are plugged into Forex brokers. Okay? So, and that means you need an ECN. You see this? Because, I mean, we should talk about this for a second here. So you have an ECN like Trader's Way. What does that mean? Okay, so you have you and Trader's Way, TW. And this is you. I'll just put a U. Okay, so you're plugged into Trader's Way. And then you execute a trade. What happens? It goes this way, and then it goes this way to another pool of liquidity providers. And that looks like this. Okay. Different LPs. I don't know how many they have, but let's just say there's five. I'll do five. Okay. And these liquidity providers are them themselves then hooked up into other liquidity providers, right? So you get this mass matrix, okay, because they might have a hedge fund. This one could also have a bank. This one could have a broker. Okay. Okay. So what do we call this? What do we call this matrix that I just drew? Because if you follow, okay, it's almost like a decision tree in game theory. Your trade goes to here, which goes to here, which goes to here, and then a hedge fund takes the other side. Or you're matched because they want to go long, you want to go short, you're matched. It's not like you show up and then they do it against you. You're matched. What do we call this? We call this the interbanking system. This is how Forex is supposed to work. And so when we gather data from the LPs, so this, right? We can discern this data. Are retail long Aussie CAD? Are they, what about iron ore? What's the positioning on iron ore, right? S&P 500, NASI, Nikkei, yen pairs, right? We have this from the LPs. Cool. This is just directly from the Commitment of Traders report. So this is institutional. And this is retail. This is why we don't have individuals. I guess you can go through and we could calculate and like make an index out of Aussie or something. Too much effort. So it's more like, are retail long Aussie CAD? Well, we know, well, first of all, they're long Aussie CAD. And as smarter traders, we know that's got to be one of the dumbest trades. Aussie and CAD are weak. So right off the bat, that's just dumb. Kiwi CAD, dumb. Okay. But, okay, let's look at Kiwi dollar, long. Okay, now this is an opportunity, right? How come? Let's take a look. Kiwi institutional investors, 85% are short the Kiwi. Okay, and retail knuckleheads are long. Okay, well, what about the dollar? It's 50-50 institutional investors are slightly long dollar and 100% bearish on Kiwi. And yet Kiwi dollar's long on the retail side. Look at this. 75% are long. That appears to be a dumb trade. We can analyze this going back to the other page. And see if our decision-making tree is better than retail. So retail might be looking at MACD or something, and that's not where you start. You need to make this decision before you even look at the chart. Okay, let's take a look. Kiwi, okay, and dollar. Let's take a look. So Kiwi is green. Dollar is red. So there is slight bullishness, and we saw this in the 50-50, right? So it's 56.43 or whatever. So we see it here, ever so slightly bullish, because all this line is the data we pulled out of the Commodity Futures Trading Commission. So we can see the number that I just showed you on the other page, 56% long versus the rest short. So it's slightly bullish. And Kiwi, the first pair, see, green, is a dog with fleas. So you're like, the only thing you can do since the 24th of August is sell Kiwi dollar if you're going to trade with the market. And knucklehead, uninformed, amateur retail traders are going the wrong way. So when you make money selling Kiwi dollar, you're taking it from traders that are lazy, inexperienced, or dumb. They're called liquidity events. So they're going to transfer their wealth to you so you can put your children through college or put some Nikes. Nikes are out, right? What do you put on kids now? Nikes are out. But whatever, you put shoes on your kids' feet. These guys don't want to invest in their career. They want to listen to YouTube gurus and trade by using, I don't know, technical indicators only. They're like, well, MACD says up, so I'm going to buy it. All right, whatever, bro. They have no idea about fundamentals and probably are pretty weak on technicals as well, right? So whatever, dude, what we know is they're positioned wrong, and this is an opportunity for you to make money. Prime, I typed it in already, www.tradars.com. So if you don't know this, you just don't know how to trade. I mean, it's so, right? It's so easy when everybody's trying to please me, baby. So we haven't even jumped into like the fun stuff yet, right? Like, oh my God. So what do we have bullish in the moment? So we look at interest rates, jobs, inflation, productivity, the technical trends, seasonality, retail sentiment, right? And institutional sentiment. And USD CAD is the best opportunity for you to consider. But you can also short CAD versus Euro. You can short Kiwi versus Euro. You can short Aussie versus Euro. Okay? You can short CAD versus pound. You see there, you're shorting CAD, Aussie, and Kiwi. Let's flip to the other side. Okay, what are your setups? Sell Kiwi versus dollar, obviously. Dude, we just went over all this. Sell Aussie versus the US dollar, obviously. Okay, and dollar's stronger than pound, but I would say, oh, you got to be careful. Because if we were bullish, slightly bullish on anything, it might be the pound. So I think you would, I personally would still look for like Aussie dollar down and Kiwi dollar down and USD CAD up. And I think that's all I would do today. Now, remember, this is just long-term macroeconomic analysis and then comparative analysis of the data. So we saw that over on the scatter plot, but now we're doing it individually. But these are just hit lists. So what I would do is then I would go to those particular charts and then start analyzing them technically. So like Kiwi dollar seems to be fundamentally bearish. Oh, and it is. Look, the technical trend. Technically, it is bearish. Okay. Aussie dollar should be bearish. Oh, it is bearish. Okay. Pound dollar is bearish. Oh, it is bearish. Now, I would consider like, what about Kiwi dollar? Where is our Kiwi dollar? How come it's not at the top? Wouldn't it be interesting if it's just not even on the list? I would expect Kiwi dollar as an op. Oh, funny. It's not even on the list. That is funny. So I am going to assume Kiwi dollar is a downer. Yeah, I don't see it. It's not even on the list. How funny. So I'll show you how to handle that. Let's go to Forex. Oops. Let's go to, come on. Let's go to Forex. And is it not here? That is, what an interesting discovery, right? All right, Kiwi. Kiwi dollar, we have it here. And of course, it's very bearish, just like I thought. Why? Well, we analyzed everything technically and fundamentally, right? Oh, Alexander, right on. Yeah, right on, Alexander. Yeah. Yeah, let me know if you want me to sit on your board as an advisor or something like that. I can be your chief economist. Yeah. Which reminds me, I've been invited to sit on another board, and I'm turning them down, but I've forgotten to tell them. Now we're in holidays. I think I'm being rude. I should probably tell them sooner than later. Okay. Well, just imagine, Alexander, that, that I am a non-fiduciary economic advisor to your team, and you can tell that to investors. And once or twice a year, I attend your board meeting, and I do a little outlook for your board about macroeconomics and focus specifically on maybe the dollar, and then inform you so that your strategies are appropriate. And that, my name may or may not help you raise some money. You're like, I got a Harvard economist on my team. So whatever. That's how people do it. All right. So anyway, so this is what we thought. I never knew it wasn't even on the scorecard summary, but you have the scorecard, and notice this. Usually it's going up, but this year it's not going up, and we can see that. So seasonality is usually bullish, so that goes in the score, but everything else is quite bearish. So it has a very bearish setup. And that's what I was saying. Like, just based on everything we've already covered today, I would think USD CAD up, Kiwi dollar down, Aussie dollar down, and that's probably enough for me. Cool. Like GDP favors the United States and all this kind of stuff. Jobs favor the United States. Look at this. Kiwi's bearish. Week over week. Week over week, not just total, but week over week. Kiwi lost 14% of their, it became 14% more bearish, and dollar became 9.61% more bullish, obviously favoring down. Like, dude, look at the data. And yet knucklehead retailers are long this. Look at this. Retail is 75% long, which means they don't know any of this. They can't even see that the market's falling technically, and they're still buying it. Like, what a bunch of knuckleheads. Okay? So there's your opportunity to make money. Where's the money coming from? This constituency right here. Retail traders have no clue. And so if you want to have a clue, try traders.com. You guys want to do some technicals, or have I gone too long? I think I've gone 90 minutes. Has this been too long, or do you want to do some technicals? I wasn't even supposed to do a webinar today. I said no live streams, but, I'm just tinkering around the office, so why not? Hit it! So no consecutive candles, no big movements, no key levels. Just give me, I don't even want Fibonacci patterns. I mean, I guess I'll have them, but I'll just ignore them. And then we'll do the basic patterns. Okay, good. So I'm more of a trend here. So let's do this. All right, USD Mexican peso going up. Okay. You guys ready? Let's do a speed round. Let's do a speed SWOT round. Is anyone going to do this with me? I'm going to ask you strength, weakness, opportunity, threat. So it's SWOT analysis. I'm going to ask you first strength or weakness, and then I'm going to ask you opportunity and threat. How many people will actually answer and answer quickly? Anybody? Anybody? No. Maybe there's just a delay on YouTube. Although, I'm still flabbergasted that you didn't know to shift your strategy from September to October. I am just dumbfounded. That means, like, many of you attended but didn't listen. That bugs me. Like, you guys ruined my day in the middle of the holidays. I shouldn't have done this webinar. Well, it's a good question to ask. All right. Well, I'm just going to do it then. I'm just going to do this. Okay. This is strength with an opportunity. This is strength with an opportunity. Okay. And I'm going to say niet on this one. All right. Delete. I'm not even looking at what asset this is. I'm only doing technicals. So I'm not going to overlap this with fundamentals. You were supposed to start that. So for example, you should know if you want to sell euro dollar. If you don't know that, then you don't know how to trade. You must understand this. This is not a signal. If you don't know if you're a bull or a bear on this, you've already lost all your money. You might as well just quit. Go take an options trading course or something. Go learn how to flip houses for no money down. But dude, you're just not doing the work. You have to have you need to have a realization. You need to really come to terms with yourself. If you don't know things like this, as a trader, you suck. Now that's in your face. And I'm trying to get you to be emotional because like you have with traders.com, right? You have all the fundamental data. Like, dude, what's the problem? I don't know. You either are informed, and when you're informed, you're a professional. If you're uninformed and you just wing it and you trade things because you like the euro dollar, I just like trading it. I trade it every day. Then, dude, you're amateur. You're just going to get steamrolled. It's you're like a guy at the park that likes to play basketball. And you're going to play against an NBA player. Like, dude, you're not going to win. You're not going to win. Like, you're not going to go up against hedge funds and win if you have no idea what you're doing. Like, dude, it ain't going to happen. So what I'm trying to say is, dude, get informed, right? So don't look at this and say this is a sell. You have to understand, are you a bull or a bear? And if you're a bear, let's argue that you're a bear. Okay, then this would be something that you would like to see. Why? This exhibits weakness and it's an opportunity. Good. And you're already a bear. Good. Sell high for all to see. Take it down. Okay, cool. We already did peso a million times. Okay, what does this exhibit? Weakness, and it's an opportunity, but I probably will override this because I don't want to buy or sell Kiwi versus yen. Why? Fundamentally. And they're both funding currencies. See, like I override it. That's not a signal. This part of traders does technical analysis. It's not a signal service. Okay? If you need that, I'm sure there's some company that'll sell you signals for $50 a month. Oh yeah, they're going to make you $1 million a year and charge you $50. No, they're just going to take your money and you're going to take their stupid signals, and then you're going to go out of business, and it doesn't even make sense. If their signals were so good, they'd be billionaires, but they want to give it to you for $50 a month. Like, dude, it just doesn't even make sense. Okay? It's bait for fools, right? So anyways, we go back to this. You're informed. Okay? If you're a bear, okay, this is exhibiting weakness, right? Do you like weakness if you're a bear? Oh, yeah. And do you like selling lower highs? Yes. So it's an opportunity. So if you're already a bear, well, what you're trying to do is sell lower highs, right? So this is trying to tell you, an hour ago it told you, okay? But remember, this is only patterns. That's it. It's not a signal. It's doing technical analysis for you. So it's saying an hour ago, hey, bro, it's exhibiting a lower high in a trend of lower highs. Should you know? Yeah. If you're a bear, is that good? Yes. If you're a bull, is that good? No. So if you're smart and informed, you know precisely, okay, if this interests you or not. Okay, cool. So what is this? Is this strength or weakness? Okay, on the longer run, it's weakness. Aha. Could make a higher high and then drop like a rock. What about this one? Maybe not so good yet. So be cautious. Besides, right? I only buy this. So I'd rather it go up, down, and up again. See, like it's only doing technical analysis. Oops. Well, I guess I'll do this. It's only doing technical analysis. So if I'm fundamentally bullish on this pair, then I need to wait for a higher high, higher low. And the cool thing is that's a pattern. TRADARS will notice it, and you need to be smart enough to wait around for it. See, you still have to be smart. If you're dumb or lazy, you're not going to make it. Okay? So you have to decide, are you dumb and lazy? If you're lazy, I can't help you. If you're dumb, it's really difficult for me. But if you have a ridiculous, sickening work ethic and you're coachable, dude, you can go pro. But none of this is going to make decisions for you. It'll help you make informed decisions. Are you the boss, or is the machine the boss? Okay? Would you let your Roomba trade for you? Help me, Roomba, help me. Okay? So, let's take a look at this. Let's change the tone here. Based on what we studied today, fundamentally, do we have a bullish bias on this pair? Or a bearish bias on this pair? And by bias, I mean fundamentals that I can prove using all the macroeconomic data, all the comparative analysis, all the institutional and retail positioning. What could I prove to you using one or two PowerPoints? Bullish or bearish? With no personal interpretation. What does the data prove factually, quantitatively? Are we bulls or bears? Okay. Good. See, no opinion. Okay. All right, so we're bullish. All right, is this pattern exhibiting strength or weakness? Look at the words. Channel up. That's strength. Okay? So 2 hours ago, it noticed that you were back at the support line. So 2 hours ago, TRADARS drew a gray arrow up. Okay? A gray arrow up. Is that for you? Is that an opportunity or a threat? So now you've made a fundamental, quantitative, strategic decision to be a buyer, and your technical analyst noticed 2 hours ago an opportunity for you. And you should look at that and go, yep, that one is for me. I hope you prefer to trade like this. Yes. Yes, I have that for Bitcoin. Like, for example, crypto. You mean like this? And I'll show you all the we can do a lot of different patterns. Those are my favorite patterns. But let's turn on all the patterns for all the crypto. And yes. Oh, yeah. Oh, yeah. So 2 hours ago, you missed the short. Short. Yeah, missed it. You missed it 2 hours ago. Okay. Big ass moves on Solana, Litecoin. Yeah. Oh, yeah. And look at some of these are quite complicated, aren't they? So what does this one mean? It's complicated, right? Okay, let me move my arrow to black. Okay, what does this mean? On a higher time frame, this is probably bearish. Okay, not necessarily this time frame. I mean, you see there was from X to A, but it's also assuming on a higher time frame, it's also bearish. And so this is like a 3-wave correction on this time frame if you're an Elliott waver, but it's a simple pullback on the higher time frame. And so, yes, recently, the last couple of days, we had a up, a higher low, and even if it makes a higher high, okay, based on the higher time frame, it's much more likely to be bearish than bullish. So on the higher time frame, it's just a simple pullback. On the shorter time frame, it's a 3-wave correction. A to B to C to D to sell. Cool. Little more complicated because really what you're doing, the trick here is you're really analyzing multiple time frames. So that's the 4-hour versus a daily. Okay? But look, it tells you the price levels and all that kind of stuff, so it's helpful. Gartley Fibonacci pattern identified last night, okay, at 11 o'clock. This pattern is still in the process of forming. Possible bearish price movement towards target levels ranging from 97.30 to 74.32. What? It's just really funny. Holy schnicker-schnocker. Within the next 3 days. Oh my God. Sell it at 104, get out at 70. Oh my God. There's some pretty high risk of a collapse there. Cardano, 88. So what do you think, Tony? Tone Loke? Tony? Here's the stock markets. Here's the commodity markets. Here's individual stocks. Okay, ExxonMobil going down in a blaze of glory. Look at that. Strength, weakness, opportunity, threat. Weakness, opportunity. Nice. Okay, cool. Let's move on. What's the next big opportunity or threat? Well, we went through durable goods today, and it was, the actual was less than consensus. So we can look at opportunities, a little bit of a scalp on Aussie, a little bit of scalp on Euro, no scalp on pound. Wow, Kiwi is going the opposite way. That's messy. USD CAD, even that one's going the opposite way. That's messy. Dollar strength, but dollar, that's messy. So anyways, we're looking at euro dollar, 80% chance that the 2-hour trend will be down. You can see it has been down since the event. So I'm like, well, why don't you show me the past? And when we look here, it actually went up, but closed ever so slightly lower. Down and closed ever so slightly lower. This one went down and closed lower. These are only situations in which durable goods was less than expected. And you can see the expected, the actual, the differential, and then these are the actual charts. 2 hours before and 2 hours after these events in which durable goods was less than expected. All these other ones were greater than expected or as expected, and we're ignoring those patterns. Dude, the level of detail is just insane. And I can do this on multiple time frames. I can do this on the 1 hour, the 4 hour, the daily. Okay. So Tony, what we do on the technical patterns, or right, the technical radar, is looking for the top 20 most reliable patterns. So it's not quantitative in that sense, meaning like the bias is quantitative. The algos don't think about what should happen. They're trained to look for reliable, repeatable patterns based on past performance. Doesn't predict future results. And in fact, the trick with this is that, let me go back to the technical stuff. When we look at this stuff, it hasn't actually happened yet. If this goes up, okay, so all we have is this and then this. So if it goes up, now we have a rising wedge. But right now, it's only potentially forming. So we're trying to kind of front run the pattern, if you will. This is why you have to understand whether you want to buy the Swiss franc or sell the Swiss franc, or buy the dollar or sell the dollar. Like if you don't understand that, then this is worthless, because this is a pattern that hasn't happened yet. So if it already happened, then you've already missed it. Someone else took the opportunity, right? And so, but under scalping, these are the patterns that have now happened. So if I go to the scalping radar, these are patterns that have already happened, and now there might be a little more meat on the bone. And you can analyze like how early or late into the trade are you. So like there's hardly any meat on this bone, but there's a high probability it'll happen. You take a little more risk and there might be offer a little more reward. So 72% chance that this breakdown heads down to here. Now, I'm not really a scalper. I used to love to scalp, and I can scalp, but I don't scalp this way. I'm a trend trader. So what I would wait for is a drop down to here and then a pullback. And then what would I do? Then I would look to sell. I would sell the lower high. This is a scalp because it's breaching this move. Oops. Okay. It's breaching that move in a pre-existing downtrend, you see? And so you might be into that. Yeah, sure. And some of these are only worth 20 pips and some are worth 200 pips. So you have to analyze it, but these are patterns that have already come to fruition. This is already broken. You didn't guess. But see, I wouldn't do this trade. But it is a pattern. Okay? No, Tony, you have to know your bias. So like the closest thing, Tony, is you can go to let me go to the technicals. So what did you say? All right. So you're a bull on oil. Okay. So you go to settings. Okay. And you only look at WTI. Unless you also trade Brent, then you can do Brent as well. So I can turn Brent on. Okay. And as far as patterns, I really only want to see trend. Okay, I'm going to hit save. So now when I go to commodities, it just shows WTI and Brent. Okay. You know you're a bull. Okay, Tony? So let's analyze this, Tony. Does this pattern exhibit strength or weakness? Okay, this is weakness. The next leg, The next leg is down. See, that's what the arrow is. The arrow isn't a sell signal. The arrow is indicating the direction of the next leg of the potential pattern. So that's a threat. So now you sit on all of this, Tony, until you see, let's say, higher, high, higher, low, and now it could be game on for you. With the idea, okay, that, we start exhibiting more bullishness. So right now it's hold tight, hold tight, hold tight, hold tight, hold tight, hold tight. Okay. So Tony, I don't want that to be my job. Like, for example, I don't want to give you a bias, and nor do I want the algo to tell you to buy or sell. There's lots of reasons for it. One of them is compliance. The other one is at $300 a month, you're not paying me enough for me to make the decisions for you, right? In that case, you could just give me your money and I'll just do it for you, right? So I want this to be a research infrastructure because I don't know if I'm right. So I want you to have the ability to make informed decisions based on what is actually happening, what the numbers actually are. And then you make decisions. And that's what I want. So that, Tony, you and I could have a steak dinner and a cocktail and a cigar, and we can talk about the markets, and you can tell me what you think. I can tell you what I think. That's what I want. And ideally, I want you to be better than me. I want to look up to you and say, oh my God, Tony is somebody I respect. When Tony Tone speaks, I listen. When somebody says, oh my God, Bitcoin's going to 200,000, I'm like, why? And they don't have any answer, I'm not interested. It's the end of the conversation, right? Okay. Yeah. I have made algos that can do that. For sure. In particular, I offered a service for a while called TradePlans.ai, and my AI could read the market, and obviously the next step, it could, through API, trade the market. Oh, yeah. And could you add a fundamental scoring filter? Oh, yeah. But that's not the direction I want to go. But can it be done? Yeah. Have I done it? Yeah. Okay. Yeah, but that team of mine, they were in Hong Kong. They don't work for me anymore. But can it be done? Oh, yeah. Yeah, well, Tony, I could build that for you. If you pay me money, I will hire the team and pay them money, and then they can build what you need. It's only money, right? Like, it's only time and money. Everything is doable for sure. And I've already found 3 ways of not doing it properly, Tony. So one of them, we tried to use like a visual AI to, I forget what you call that, visual AI, that it would see patterns. And that doesn't work reliably, in particular because charts can look differently. So then I've done it by pulling in the candlestick data from a service provider. And so you imagine millions of tables, and it's not looking at the patterns, it's calculating the patterns. Yeah. Could you do a fundamental overlay? Yeah, without a doubt. Yeah. So if you got some money and you really want to do it, okay, give me a shout. Okay. Yeah. It's like half built already. Yeah. So let's say you could jump on probably the first $15,000 of development you would inherit. Yeah. So anyways, you can email me. Yeah, but all that stuff's cool, right? And that all comes out of the algorithmic trading program I did at Oxford, so I learned a few things out of there. Let's take a look at how quiet the markets are. I want to do some implied volatility analysis. Okay. Ripple, Litecoin. Wow, all the crypto right now, huh? We can look at oil. I'm going to skip the crypto. Yeah, well, every day, Tony, you wait, the more you're falling behind. The AI industry is just moving so fast. You know, waiting 6 months now is like waiting 6 years. Pretty soon all your competitors already have something and you're thinking about maybe getting into it. You're already behind. So yeah, whatever. All right. So implied vol for WTI depends if you're a bull or a bear. I'm a bear on oil. So I'm kind of like, this would kind of be my plan based on implied volatility for WTI. If I were me, that's how I would read it. USD Kitty CAD, I'm a bull. Okay, so if I'm a bull, I'm going to look at it like, okay, it double topped. But notice the 4-hour high predicted the top before we even got the top. And so now I would do this if I were a bull. Or at that, I would read the pattern. I would read this analysis in that way. Cool. We'll skip the 10-year. We can go to Bitcoin. Okay, Bitcoin. Okay, are you a bull or a bear? Well, it looks more bearish than bullish. So the way I would read it is once we got down to, 93, I would expect an up and then a continuation down. Next. No diggity, no Dow. Okay, big comeback on Dow. So if you expect it to go back up, it's fallen all day. Sweet. Well, right around 42,500-ish. Okay, there'd be some up, but not a lot. What? So it's like you would expect, well, it just rocked. So like, wouldn't you expect like a big move here? That's not what it's telling you. If you need that, you do daily pivot points. Okay. This is not daily pivot points. It's similar but different. We're looking at the Dow. Okay. Every Monday, this time of day, over weeks and weeks and weeks and weeks and weeks and weeks and weeks. Many, many, many weeks. So what normally happens compared to what has happened is unusual, and we should know that. So if you were going to be a buyer of this, yeah, current events have really made this dramatic, but, based on what usually happens, you probably won't get, if you're a bull, you probably won't get lower than 42,300, and you probably won't get it any higher than 42,700. And your up will probably take days based on normal volatility. By normal volatility, we call it implied. What's normal, you just kind of expect to continue. Now, you may not get that because this is unusual, but you need to know normal if you even have a chance. Okay? Now, if you're a bear, you're way out of position. So, if you're a bear, what you do is you take this daily projected high, 42,700, and this is what you expect between today and tomorrow. You ready? Wait for it. Ah! So, implied volatility only calculates volatility, it doesn't give you a direction. Oh, so you need to be opinionated about the direction of the Dow. That's called alpha. We have that for S&P 500. How about silver? Okay, are you a bull on silver or a bear? For fun, let's say we're bulls. Okay, we've come up here, not too far from our 4-hour implied high. Now we're pretty close to the 4-hour implied low, and we probably want to take it long to 30. So in the next 24 hours, if we find support around 29.40, we should be able to get it up to 30 in the next 24 hours. Oh my God. But the next move is going to be, okay, 1, 2, 3, 4, 5, 6. 6 hours from now, okay, we'll probably get the move. Okay, so New York close. Okay, and then a little fizzle fade, and then Asia open. So now you get our little waves, right? Like New York close, we'll do this, and then fizzle, and then, okay, and then Asia comes in and then fizzles. Then what? Oh, around, 4 o'clock in the morning, we get the next leg, and we start New York after a London rally. We start New York on the high, and it fizzles out. Can you see? Everybody else guesses. We can start plotting out price and time based on weeks and weeks and weeks and weeks and weeks of data. This doesn't predict the future. This only quantifies what is normal based on past. We can have abnormality, oh, for sure. But if you don't know what's normal, then you don't know what's abnormal. Euro dollar, okay, dropped right into our zone. So are you a bull or a bear? Okay, we're constantly losing volatility here. Oh, you mean like this whole period? 1, 2, 3, 4, 5 hours of nothing? Oh yeah, you mean like that whole period? Yeah. Yeah, for sure, yeah. Look, totally normal. We already know that. Okay, so 6, how many is this? Let's say we're almost done. Yeah. Well, okay, so 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4. Wait, 1, 2, 3, 4, 5, 6. Okay, right there. Okay. And then before that, 1, 2, 3, 4, 5 hours before that. So we go 1, 2, 3, 4. All right. So according to what's normal, okay, volatility, let's do this in pink. Volatility starts rising here, which is this circle, and then it fizzles out, and then volatility increases here, which is the second circle, and then fizzles out. Oh. And now we're losing volatility. And it gets tighter and tighter and tighter. Cool. Sure nice to know. Okay. Just so you know, all our live streams this week have been pushed out to maybe next week or likely the week after because of the holidays. So, but if you've subscribed, then you've already received the rescheduling email. I apologize for that. You probably got 10 emails from me all in 5-minute time span, but it was me rescheduling our performance coaching team. If you're looking for ways to fill your time, why don't you do the courses? Okay. Like you could do the oil trading one, which I love. You can do day trading. You could do swing trading. You can do the macroeconomics one I love, which is just fantastic. All right, like business cycles. You could study this.
Boom, boom, right? The dealer bought the car from the car manufacturer. So the car manufacturer gets paid. My money goes, then there's rent. Okay? Then there's interest. Okay? This is income, whether it's a bond or mortgages, and they both need each other. Because if there's no households, there's no need for a business to offer you a product or service, right? And then,
so believe it or not, when I was at the St. Louis Fed in June, this actually came up in conversation. It was assumed you knew this. To the point where I'm like, are you talking like the circular flow model? And they're like, yeah. So like, if you don't know this, you're not an economist, right? So it was really funny. Like, I'm like, you're talking about the circular flow model here. Yeah, for sure. This is something that actually happens at the Fed, something that every economist should know. And I teach you.
And of course, if households didn't provide labor, they would have no money, and there'd be, once again, so they're like, go back to Yale or something, right? So anyways, you can't do that. It's so undergrad, right? Like, so squeeze the margins a little bit, right? Yeah. All right, so let's practice. On the circular flow model, I want to see yeses or nos or trues or falses. Let's do trues and false, okay? This is truth or false. On the circular flow model, businesses sell factors of production to households.
It's good, right?
You give me money, and I'll give you title to the house. You can live here, and I'll go live somewhere else. And employed are workers that are actively looking for a job. So really, if you can't really do anything for anybody, then why you're not really in the workforce, right? Does that make sense?
So we go through all the different types of unemployment.
Probably have a choice, right? Choice could be, hey, maybe I should go back to school. Okay. Later in this lecture, but also in future lectures, okay? Measures the price of all goods produced. It's GDP. I like that one, right? And a lot of...
Look at this. It's so good. Oh, my God. You're learning how to calculate the GDP deflator. Like, dude. So if you got nothing to do over the holidays, tell your drunk uncle to stop drinking, and then you should go, you should go do the training courses. Look at this. This is just 1 hour of like 16 lectures. Like, look how detailed it is. It's so good. Oh my God. What else is on here?
Right? The lenders are hurt by inflation. Borrowers, right, benefit because now they pay. So if you remember a year ago, I said time to load up, right? Because in the United States is growing at 2.2%. Okay? Once again, that's kind of sounds like all your depreciation is eating up all your investment dollars. Okay?
And here's another one for you guys that, are getting professionally registered. In the first section of the Series 65 test, this is the questions. The very first section of the Series 65 covers this. And if you don't know literally peak or trough or where you are in the business cycle or productivity gaps and stuff, you're not going to pass.
Get an employee is to steal them from your competitor. So you have for example, this one I'm going to need a drawing tool for. Okay? All right, so let's restate the obvious. Okay? I'll do a lighter gray. Okay? This is potential GDP.
Y star.
Okay? Y equals GDP. Okay? But remember, Y also equaled full employment. So full employment equals full GDP. Okay? Cool. So now we got this peak and this trough. So when the Fed said overshoot, we were here, trying to get to here. And the Fed said they won't raise interest rates until they overshoot. What he's talking about is this idea of getting above full productivity and be up here. Okay, and they said it would take years to get to that level. So this is called
productivity gap.
Right, the productivity gap.
Oh, I know it. I know it.
Where?
Cool. The thing is, do you know it? Huh? Do you know it? So under even registration exams by the FINRA, if you don't know this, you're not going to get registered. So anyways, that's just one of many, many courses. You have 100 hours of courses here. Maybe you should be doing that over the holidays. Well, if you're bored, maybe not watch football. Instead, become a genius, right? So anyways, this is all at traders.com. Dude, it's insane. This is a game changer. And I got some aces up my sleeve that I hope to be able to announce early in the new year. Okay. Lewis says, hey, when are you planning to accept students to get trained for getting funded? Can't answer that. And how much will it cost? Free. That's my goal. Wouldn't that be cool? Hey, Lewis, would you like $20,000 added to your trading account? Okay. Now, what should I do to make it logical and not some BS dream? Should you use technical and fundamental analysis and have a support team like performance coaches as part of the process of you trading? Do you think that is a reasonable requirement? Or should I just give money away to people that think they can get rich quick? What do you think is the best? What's the better? People that intend to trade like institutional traders or get rich quick knuckleheads? Which one should I put money toward? What would you recommend to me? Yeah, okay. So you would have to be a pro member of traders.com. So you have access to everything. Okay. How much of the profits should you keep? Help me design the program. See, I don't even know what's normal. What's normal out there? I don't know. I don't use prop funds. Okay. So, but what's normal? I don't know. I don't know the prop firm business. I think they're stupid. But what is the normal profit sharing? Okay, cool. What if you were able to keep 100%? What if you kept all the profit? Would that be attractive? Okay. All right. How many exams should you have to pass to qualify? And what is the price per exam? And forgive me, again, I don't know prop firms. I don't know what you call them. You have to pass some sort of test. And they're like, if you can't make 10% in a week, then you don't get any money. I think that's absurd. 10% in a week is designed for you to fail. But whatever it is, how many tests? Is there one qualification and then a second one? And is the first one $100 and the second one is $200? Like, help me understand what would be normal before you actually got money. Well, you got to be careful. It's not real money. That's the other thing. So prop funds have to legally tell you now it's not real money. So I'm going to give you as real as every other prop fund. But how many exams and how much each exam? Come on, guys. Why does this take 20 minutes? What do others charge? What would be normal? Is it one exam or is it two exams? I've talked to a few, and they're all designed about the you have to pass the test. You have to pass the test. They make millions of dollars selling tests to people. I don't think they actually, I think their whole business is selling you exams. Correct me if I'm wrong. It seems like most of them just sell exams. If I'm wrong, let me know. I'd like to know. All right, here's my theory. Since you're not answering, I don't know, I guess you guys don't know or something, or I'd like to have no exams and there would be no fees. So that's what I'm trying to do. And I have the relationships to do it. So how do I protect the firm, Lewis, from you just blowing up your account? I mean, look, if you don't understand the logic, then this is where, like, when you actually look at what a lot of the prop firms do, if you just look at what they do, it's obvious that they're not legitimate firms. It's obvious that their whole business is selling you a pipe dream, selling you the dream of making millions of dollars, but then you got to take a $60 exam and there's a 95% chance you fail. Well, if you actually pass the first one, then they'll charge you $200 for the second one, give you a bigger dream, and make it even more likely you fail the second one than the first. You just look at it. And then if you actually get funded based on how retail Forex traders trade, there's still a massive probability you blow up. And it's all designed for you to fail. I mean, you just do the math. Like, it's so obvious. All you have to do is the math. So I need to have a way that it actually works, like you actually make money. But you can't, I need to protect myself from the risk of maybe you're the world's dumbest trader. Maybe you're a degenerate gambler. Maybe you have no patience. Maybe you have no discipline. I don't know. So how do I protect the firm from knuckleheads? If I'm going to have, like, there's no tryout, there's no exam. I don't want to say you have to make a certain percentage per week. I want you to be able to trade. You can, if you want to scalp or spot or swing or carry, I want you to, if you want to hold over the weekends, that's up to you. Like, that means it's designed, there's no design for you to fail. That's my first thing. There needs to be a model in which it's designed for you to succeed. Lewis, you could have a Harvard education and still be an idiot. So that's not it. That just happens to come with traders.com. The way I would do it is you put in 5,000, we put in 20. You put some skin in the game. That's it. Therefore, you're going to manage the money. You're going to manage the money properly. If you're a degenerate gambler, you're going to lose $5,000. We're going to shut down the account. If you're a knucklehead, we're going to shut down the account. Okay? But you can do whatever you want. It's not illegal to be stupid. But we're not going to lose money. And that's that. So if I can build a relationship like that, this is what I'm looking for. And I'm quite certain I can do it. If I can build a relationship like this, if you feel ready and you're willing to put skin in the game, I'm not going to charge you any money. I want you to win. I don't need a yellow Lambo. I don't want a yellow Lambo. It's not about me. Okay? Yeah. Okay? Maybe you only have $1,000. Well, then you put in 1,000, we'll put in 4. Maybe I don't know how far I can take it. There's more conversations, but wouldn't it be neat if you put in 10 and we put in 40, So now you have a $50,000 account and you keep all the profits and there's no monthly fee and there's no test. Nobody's doing that, But nobody thinks like me. It's not about me. It's not a moneymaker. I don't make money selling courses. I won't make money selling trials. I won't make money keeping profits. I won't make money on monthly fees. But you'll be a kick-ass success. And I know somebody can't copy that. Because you never had a friend like me. Mama bop, wah wah, ba ma ba, da da da. Yeah. Yeah. Yeah, that just happened. That was killer. Yeah, it just came to me. I had to go with it. I just had it. All right, so I got a big day full of lots of work, but I want you to know that you have a team that works for you, even on the holidays. Yeah, I'm on your team. So thank you for inviting me every day into your life and onto your team. I hope what I've been doing the last 20 years is making a difference. I want you to be a success. I want you to be a hero to your family and to your neighbors and to your community. I hope all these resources that I've designed for you, you use these superpowers for good. If you make too much money, I hope you give some to charity. I spend over 100 hours a year. I don't know, it's not a lot, but I spend over 100 hours a year giving back to charitable contributions. Yeah, not only do I give money, but I give my time. Yes. So, this is what we do. I think we make the world a better place, and I am grateful for our relationship, and for many of you, our friendship. This is a difficult gig to do. Trading and investing is not easy. But I'd like TRADARS to be the one-stop shop for everything. I want it to be like a Bloomberg terminal for retail traders and investors. I want it to do fundamentals. I want it to do technicals. I want it to analyze market conditions. I want it to read the news. I want it to analyze the news. Yes, I even have that. Yeah, I have all of that. I haven't fully released it yet. But TRADARS now reads not just the headlines. It reads hundreds and hundreds and hundreds of articles from dozens and dozens of financial websites, and then aggregates the sentiment of the article, which means that AI has to read the article and understand and comprehend the article, and then create an aggregate gauge of whether the market right now is bullish on gold or bearish on gold. Bullish on pound dollar, bearish on pound dollar. It already works. If you want to see it, I just have to log in, but I can show it to you if you want. It already works. So I'm going to give that to you guys in the new year. But I also want for all your education and all your performance coaching. But I'd love for TRADARS to offer execution and funding as well. So I'm working really hard on your behalf where you become a subscriber to traders.com, and it's your full infrastructure for a successful trading business. Everything, fundamentals, technicals, volatility, sentiment, coaching, education, execution, funding, and community. You won't need anything else. And then, of course, you have me, where I am your champion. I am your champion. I'm cheering for you, you see? And I hope you feel that is true, and I hope you believe that is true. Peace on earth. May the pips be with you. May your profits be above average. Will there be a live stream tomorrow? No, probably not. I just happen to be farting around the house, and I'm like, dude, I'm here. I'm sitting in my chair. Let's do a live stream. And so I gave you 2 hours, 2.5 hours. Not bad. So, everybody, peace on earth. May the pips be with you. May your profits be above average. Have wonderful holidays.